Well, Matthew, I'm Chris Frostad, President and CEO of Purepoint Uranium Group, Inc. We are a uranium exploration company operating out of northern Saskatchewan with a fairly substantial portfolio of projects, most of which we partner with very strong industry leaders, which is giving us the time and the money to carry on through this market.
Okay, exploration driven, exploration growth. That's what we're after. So what does that mean in your context? How have you allowed yourself to do that in a market like this?
Well, and we've spent a lot of time over the last year really kind of recreating the boat, if you will, to make sure that it's set right for this market. We've always had a fairly substantial portfolio of projects, but we knew that really to make it in this sector, you have to have really good projects. And you have to have the money to explore them properly and the time to explore them properly. And this market has been very volatile and never really doing what people hoped it would do. But we wanted to make sure that we have what we need to get through it. So we have established 6 joint ventures with the likes of Cameco and Orano and IsoEnergy and Foran Mining, all of which have substantial balance sheets, and they help us financially, and they technically validate these projects. So we operate all of these projects. So I think we're in a very good position right now to move through this cycle that I think is getting stronger and stronger, and do the exploration work we need to do moving forward.
So why is it smarter to take money from other groups rather than just raise your own?
Because what happens over time, again, this isn't a Hail Mary, and when you look at the past discoveries, if you will, and there's been maybe 6 over the last 20 years, none of those were found without expending tens of millions of dollars over a substantial amount of time, over substantial portfolios. And, so this is not a throwing darts at a board sort of scenario. You have to set yourself up properly to do that. And I think, so in our case, we could see that over the years we'd doled out a lot of shares. We were getting a little thick when it came to our shares. We knew we needed to do a consolidation, which we did last year, and we know how that typically works out for people. So we needed to combine it with the bigger strategy, which was to really get some strength in our partnerships and strength in our portfolio. So in doing so, we've right now we are, like I said, we're operating all of these projects. So we are their exploration arm, as you will, on these very valuable projects. All of these projects are adjacent to or on trend with some of the most important places within the basin up in northern Saskatchewan. And for every dollar that we're putting in the ground per hectare, we have to come up with about a third of that. So we're not issuing shares madly to do that. We can move through these projects properly. We're not committed to one single target, if you will. And I think we've increased the odds that we're going to find something, that something is on these projects, and that we're going to be able to have the bandwidth and the time and the money to find them properly.
Okay, so that's the kind of broad business model, and that's the kind of simple intro for people who've not heard the story before or just getting into this story. There you go, guys. That's the model. Let's get into specifics. Let's get into these partnerships. Okay, so let's take Cameco or Orano or IsoEnergy in any order that you want.
Sure.
Let's talk about what did each of those agreements look like? Why are they good for your partner? Why are they good for you?
Right. So, well, they're all essentially the same. I mean, these are actual joint ventures. A lot of our peers and a lot of the companies operating here are working on these earn-ins. So I have a piece of property, and I'm going to let another company invest in it and earn a piece of it moving forward. But they tend not to get into the end game where you're actually in a joint venture where all the partners are contributing financially. And all of these projects that I'm talking about, all of our partners are contributing financially to the advancement of these projects. So if we look at, say, Hook Lake, which is it's probably the one we've been talking the most about over the years. It sits on the western side of the basin. It is adjacent to and on trend with the Arrow deposit and Triple R. NexGen and Paladin's projects over there. And it's a very important project to our partners. We've spent, tens of millions of dollars at that project, and really because it is the number of targets and the number of conductors, if you will, which we talk about, that go through that area are far more abundant than we see anywhere else. So it's a busy place in terms of finding the best place to drill. And they validated the fact that they continue to fund this project means that they continue to see the value in it moving forward, because, as we've said before, if it doesn't look like a tier one opportunity, they're not going to invest in it from an
exploration. Who's on that? Who's the partner on that one?
Now, partner on that one is both Cameco and Orano. So we own 21%. Right. They each own 39.5%.
This really can explain why this model works, okay? Because you talk about having spent tens of millions of dollars on that yourselves, right? Is it yourselves or with Cameco and Orano?
Collectively.
Okay, right. But, right, and you're a 21% holder. Well, you're a 21% equity in that project, right?
Right.
How much can you work out how much you guys have spent on that?
Well, we've spent about a third of it because we did an original earn-in. So even though we own less, we've contributed about a third of that in terms of what goes into the ground, but we've also earned back 10%, well, actually less our portion of it. So say 8% of that amount that I'm talking about, we earned back as a management fee because we are operating the project. So for every $1 million we put in the ground, we have to come up with our $210,000, but we get back $100,000 as a management fee on top in terms of running that project.
So let's put this in real simple terms. Well, lots of juniors go out there hunting for stuff. They raise money, they drill, and they don't necessarily make discoveries, right? And therefore, lots of money is wasted, it's put in the ground, and no one finds anything. Therefore, it's not valuable. And those companies need to work out how to kind of survive. Some do, some don't. This model allows you to, I guess, stay in the game and have a part of the ability to capture some of that value when a discovery is made, because lots more dollars are being spent on the ground that
That's right.
a junior could possibly raise themselves without diluting the budgets out of their shareholders, right?
Right. And I would not say, I mean, when another junior is investing in a project specifically and they don't find anything, that doesn't mean the money was necessarily wasted. Where it becomes wasted is when it's the only thing they've got. So they have to keep investing in it, and they have to keep looking, despite the fact that they may have gone over the line in terms of it was time to move on. So that's when things become difficult. And again, when you're funding the whole thing yourself, you're only going to be able to take it so far. I mean, a good example right now, and we'll talk about Hook Lake. I mean, our priority there right now for this year was supposed to be what we call the lightning zone. So in one of the corridors last year, we started coming into the mineralization and coming into all the good things that we think we need to follow up on. Well, lo and behold, over the last year, NexGen, just to the south of us, has now identified what may well be a second deposit. It's about 1 kilometer south of our claim line. And it's on a target conductor that comes right up through our property that we have yet to test. So that is all of a sudden something, quite important and quite a priority to our partners. NexGen just announced a 43,000 meter drill program on that thing to try and prove it out. That's at least $15 million. So unless you've got the oomph behind you to really look at these things properly and look for them properly, all you're going to do is scratch the surface, because, to prove these things are a deposit, to prove them up as being mineable, it takes tens and tens of millions of dollars. And as a junior explorer, if your only hope of raising that money is to continuously shell out shares, the market doesn't let you do that, for too long. And you haven't got the time. I mean, we can also, we talked about the time. These our partners pace us, and I've said that before as well. Where in and of ourselves, we may have had to go in and just drill our brains out and raise money to do that. They've go, whoa, that's enough this year. Let's sit back and digest this and look at it next year. We go, well, okay, but they've make us do that. and take the time to do it. And now that we have a broader portfolio and a bigger portfolio that allows us to continuously work these things in that same fashion, we don't mind spending a little bit more time making sure that the money's being spent properly and being spent efficiently and effectively and going forward. I mean, right now, our eyes are on that drill program just to the south of us because we want to see what they pull out of the ground before, we start going hog wild to the north of the claim line.
Right. So what we're talking about is a blended risk profile for companies like you who employed this strategy. It means that you're not blowing your brains out in terms of diluting the heck out of everyone. And there's a much bigger balance sheet at play here to kind of get after stuff. So it's better having something big rather than nothing.
Well, of course.
Nothing, because that's where you kind of end up as a junior.
And plus, it's always difficult to determine whether, technically speaking, whether we're really chasing the right animal out there. And the fact that we have got the likes of an Orano or a Cameco or a Foran or a IsoEnergy continuously putting money into this, people that are not focused on the next drill hole and the next big press release, they're focused on actually finding something that they can develop. It validates what we're doing, and it means that the likelihood of us doing the right thing is much higher.
Yeah, and the thing is, invest. I'm just trying to put this in terms that people need the space can understand, which is, if whatever your thematic, whether it be uranium, gold, copper, so whatever you're into at the moment, having a sense of what you're investing into, not just uranium as a uranium company, because they're not all the same. They all have different types of risk profile for lots of reasons. And I think I always quite like models like this as part of my risk portfolio or part of my risk strategy when building a portfolio in whichever commodity I'm into. Can we, again, if we're just sticking with Cameco and Orano, so budget for this year looks like what for drilling?
Well, for that particular project,
yeah,
we're still working through the budget because we've now changed our priority.
Okay.
And we've done this before. We've taken a beat if something's going on the other side of the claim line that they want to take a look at. So, in fact, our budget this year at Hook hasn't been established yet. It normally would be by this time, but we really are waiting to see what goes on over there. And so the focus again has gone back to Smart Lake, which is the other joint venture we have with Cameco, and it's just to the west of there. And it's a project that we haven't drilled for 10, 12 years because we did one drill program there. We were finding uranium, but all the effort and all the focus moved east over to Hook Lake. And that's really where the focus has been. So right now we're taking a beat. Now that we understand the area better, we've gone back to Smart over the last couple of years and re-looked at all that core and recognized it a little more deeply now because of the work we did at Hook. We just finished a geophysical program on the north part of the project in December to kind of better define a strong conductor we saw coming through there that hadn't been tested yet. We've determined that it, in fact, is 3 conductors, not 1, which changes the profile and prospectivity of that particular target. And so we'll be drilling up there in the next, probably mid-March we'll start there. So we have a drill program set there. The budget there is $1.2 million. We'll drill 4 holes. It's really, it's just the first pass up there. And we'll see what what we're working on up there.
What's the attitude with Cameco and Orano? Obviously, Orano have got challenges elsewhere in the world, and Cameco have been notoriously cautious and very very optimistic about the market, obviously, but very very cautious in terms of allocation of exploration budgets over the past few years. Mm-hmm. Are they going to step that up a bit now?
It feels like they are. I mean, we can only say so much, and they're only telling us so much. But I know that Orano has 3 other exploration programs going on over on the west side of the basin this winter. That's more than we normally see over there. And Cameco has certainly been talking about investing more on the west side of the basin. I mean, it's turned into a very interesting place to be from an exploration standpoint. And again, Hook Lake has taken on another life as well, because again, it is so rife with targets that when we see something light up like that, it gets everybody's attention. So, we're watching, and we're defining. We may be even doing a little more geophysics up there before we put a drill hole in it. But right now we're staring at two priorities for them out there, and they're keen to invest. They've made it clear that they're keen to put much more investment out in that end of the world, because it has. You mentioned this before. It has been light for the last few years.
Yeah, it has been light, and I think that therefore the pace is maybe turning the market off a bit, but because they're in control, right? They've got each got huge portfolios.
That's right.
And they've got other priorities. For you though, your costs are covered. The management fees cover your costs on those two projects. Is that right?
Essentially, they do now. I mean, they with Hook, they certainly did during the downtime. I mean, we'd scaled back significantly, so it essentially was covering our overheads. And now with the addition of the ISO projects, those projects that we're now working through in the coming year, we're pretty much have our overheads covered through those management fees. And it allows us to raise flow through money, which we've talked about, at a significant premium, and invest that in these projects and earn back the hard dollars that would typically we'd be issuing at a discount, back through these management fees. So, again, now after all this time, there is a lot of focus for us not to, amp up or dilute ourselves, too aggressively as we move forward. I mean, we do need to still raise money and do want to raise money, but we want to do it as carefully and efficiently as we can.
Yeah, and not have to take too much at any one time. Okay, so given Cameco and Orano are, I guess, pretty much driving that strategy and driving that timing and so forth, right? We'll say, well, how do we turn the volume up here? How do we turn the afterburners on? Because most juniors need to kind of move at a pace to be able to tell that kind of growth story, etc. Now you've got this IsoEnergy, this relatively new JV. Can you explain the sort of terms there and also allocation of budget? Because I think IsoEnergy's profile is going to be very different from Cameco and Orano in the sense that they are a kind of growth hungry animal. But what's that going to mean for you?
Well, it means yes. So they're a little more aggressive in that regard, certainly. And what we've done in that situation is we actually created a joint venture. Nobody earned in on this one. We created a joint venture by putting together a dozen or so projects that we each held, and created what is pretty much a district scale opportunity. I mean, it's huge, and divided that up into 3 projects now. So we have 3 projects that we are in joint venture with IsoEnergy. It's a 50-50 joint venture. So it's 50-50. But operationally, we're the exploration portion of that equation. So we are the operator so long as we're exploring. If and when we identify an opportunity or a deposit, at that point in time, IsoEnergy would pick up the torch and move it through a development phase, and we would continue exploring the rest of it. Because again, this is a massive project. We've divided them up into 3, but the one that we're focusing on this year, and we'll start drilling there in the spring, is called Dorado, and it's actually the extension off of their Hurricane deposit. So by putting together all of these projects we had, what we've created is the Laroque trend that runs up and through Hurricane. When it hits our Dorado project now, it takes a fork in the road, if you will, and it heads straight off across the northern portion of that project. And it also forks down and curves around in a big curve around a granitic dome, but comes through now what all these collective properties have been put together. We've got a budget this coming year of $5 million. Most of it is going to be spent at Dorado. And we're actually, now that when you put together all the collective geophysics and the drilling that's been done historically, and you can actually correlate and combine all of this information together, you get a very clear picture of the region. And so we are going back. We've actually got 5 different discrete areas that we'll be drilling this year through the summer, to then figure out where we're going to start really focusing on that particular project.
Right. Now, as a reference, Cameco and Orano are very different type of beast to IsoEnergy, who are sort of up and comers, as it were. They're going to want slightly different things out of a JV agreement, out of any kind of working arrangement, and certainly maybe they'll treat the data very differently as well. So therefore, they'll be chasing a different sort of data profile to those other two, I suspect. So how do you work with them on what you target, and what information you talk to the market about?
It's very similar, if not almost identical to our other joint ventures. I mean, the kind of the growing pains of this relationship is that they haven't been in a joint venture arrangement before. So, and of course, the last 6 to 8 months has been focused on the legal aspects of this agreement as opposed to working together. Now we're into that phase of now we're working together. But the way it works is that we, as the operator, if we disagree on things, we're the operator. We get the casting vote, if you will. If these things move into a
what would you disagree about? What could you disagree about?
Well, some of the differences are budget wise, right? What we've done is we've set up a minimum budget and a maximum budget that there will always be work going on. So that's very different. We both agreed that we want to continue to, the area is big enough, there's enough work to be doing that, we're committed to a minimum budget every year. And neither of us can push each other over a maximum budget if we don't want to go there. We can agree to do nothing if we want one year, and we can agree to blow our brains out one year if we want. But we put a governor on that so that we can't push each other into a bad situation. So that's one aspect of it. What would we disagree on? There's not much, not as much as one would think going into it. So we of course have to, like we do with our other JVs, we have to put together a program and a plan late in the year. We have a technical committee, and we go through it, and everybody has a say. And over the years, we found that there may be. It's not so much a disagreement, but you've got a raft of opinions as to where we should be prioritizing, where we should be going. And we've never found over the years that we couldn't accommodate. There's never been such a drastic difference of opinion that it couldn't be accommodated, and make sure that we get everything done the way that the people think it should be done best. And that's just the way. I mean, it's not just one geologist in our shop, doing, guiding the way. We actually get the benefit of a whole other team of geologists who are looking at this stuff as well and challenging us. And that's something that you don't get when you're working on your own projects. You don't get challenged by other technical folks. In all of these situations, we have to defend what we're doing, and defend it well. And that just keeps everybody honest. And it's interesting because, I mean, the ISO folks have actually, their geology team is made up of ex-Cameco people who we worked with over the years as well. So it's a pretty cordial relationship in that regard.
Okay. And what about, is there scope or room for other JVs, other partnerships at the moment with your portfolio or others?
We've got 2 other fairly large projects to the south. There's the Tabernor and there's Russell South, we call it. But Tabernor is huge, and we've spent a fair amount of time and money over the last few years refining it. It's a very large conductive band that cuts across just outside of the basin. We've actually over the last couple of years, as we've been doing more geophysics, we've been able to add to it. So what it represents now is again a very large target that is essentially ready to really start drilling, but it's going to take, to do it properly, it's going to take time and money to do so. So that would be a project that we would most definitely be, happy to bring a strong partner in to move that project forward.
How do you go about finding a partner?
Well, you have to have, if it's a strong partner, you have to have an attractive property. You have to have an attractive project, right? Because your larger players are not interested in the greenfield stuff. They're out of that game in most cases. If ISO is an example, between them and Consolidated, they spent a lot of time just gathering up stuff to figure out what, and they don't need to keep doing the greenfield stuff necessarily. Same with Cameco and Orano.
How much more money do you need to spend to kind of get it to a position where either of those could be attractive?
In those cases, we've spent a few $1 million.
Yeah. How much more?
How much more? Well, they're ready now. I think we need to do a little bit more field work out there, but essentially they're ready to drill. So once they're at a drill ready state, and you've got all the data to support that moving it forward and advancing it, then you can start showing it to partners. I mean, going back historically, our Red Willow project was at one time being earned in on by Rio Tinto. And at that time, we had probably spent upwards to $3, $4, $5 million doing extensive geophysics over the project, doing a lot of first pass drilling, and that was their attraction, because they saw a project that was now really ready for prime time from an exploration standpoint. And we worked with them for a few years, and then they essentially packed up and got out of the basin completely. So they left the stage, if you will. But in that case,
and what did they leave behind?
Well, again, they got waylaid by the Hathor deal. So when they came in over a year or two, they did some very minor drilling. They say they spent $5 million on doing some drilling, and then got distracted with the shiny thing over at Rough Rider, and essentially gave us the project back. We went through. I mean, there was a lot of horse trading back and forth, but at the end of the day, they decided that they were as a major will, right? That they can change their mind overnight, and that's a challenge that you run into with when you were working with these folks, is that they can park your best project if you're not careful.
We've talked about that already in this conversation, and we're certainly touched on it. But so when you say we're looking for a strong partner, don't you have to kind of get that balance right? Because I think every time the uranium price moves, you have these management teams coming around and go, "Oh, give me a uranium project. I don't really care what it looks like. Just give me one." You know the outcome's going to be. So you got to be sensible and say, right, those probably aren't the right kinds of people to, even if they've got a bit of money that they've raised or so they'll promise you, they're not going to be able to kind of keep doing that through good times and bad. So how do you find, and how many of them are there, the right sort of profile to partner with on projects like this? Because obviously the more JVs or the more partnerships agreements that you have in place, the more likely you are to make that next discovery, be able to kind of move this thing through phases. So what's the process you go through?
Well, I don't think it's a process. I don't think you can just decide today, okay, I'm going to go find myself a partner. I mean, it's the time. It's the timing has to be right. You have to wait for the right deal to come along rather than going out and forcing a transaction. And that's what we see a lot of people doing, is proactively forcing a transaction for the sake of a transaction. This thing with ISO, I mean, I've known Phil for years. We've watched what they've been doing for years. We know each other well. And, it was last March, it was a year ago, when we sat down and first held up a map and went, what if? And that took 8 months, 9 months to actually turn it into what it is here. So it's not quick, it's not easy. What motivates, I don't know. We had Rio Tinto come in sniffing around, looking around. This is 15 years ago. And then they just went away. It happens when it happens. You have to be ready for it. You have to have the right projects for it. And,
it sounds very passive. I mean, look, uranium world is a very small world. There's very few people. You all kind of know each other. It's not many people. But
that's also what makes it difficult.
Yeah, it makes it difficult because it's small. But at the same time, process what you describe with IsoEnergy sounds like a process. I know some people.
Yes.
We put a hypothesis on the table. We discussed it, and it took a year to kind of get to a point where we get over the line.
And don't think we haven't done this time and time again. I mean, we've sat down. We've sat down with Denison more than a couple of times and looked at the same sort of things that didn't necessarily work out because of the market timing or what have you. We've looked at we've gone through other projects with Orano in terms of setting these things up. So We're always doing it. We're always looking for it. And it's because we know these
That's a
people, because they know us. I'm sorry? That is a process. Okay.
Jeez.
Okay. Well, yeah.
That's what I want to hear. I kind of want to hear and see that one of the things that's just sitting back, smoking a pipe, and saying, "Well,
no, we'll wait till somebody knocks on the door." Right?
No,
no.
Okay, there are. No.
But what makes it possible, because it is such a small area, is when you do already know people and have the history and understand what they're doing, why they're doing it, how they're doing it. A good example is what we just did with ISO. Dennison and us were talking about 6-7 years ago, because we had the ability also to put together a huge package of land out there. And the discussion then becomes, well, do we roll that out into a separate company? Do we do it this way? Do we do it that way? And then all of a sudden the market shifts downwards. You're like, okay, this isn't the right time at all. And you move on. So, these conversations come and go. We get these kinds of incoming calls from some of the banking shops who see how to do some of this. They get frustrated though, because they'll come in with an idea, and then of course you tell them, well, we've already had that idea, and we know all the people that you're going to try and introduce us to, so that doesn't work too well. But we've talked to people out of Australia, stronger, and not weak groups, but it's a matter of looking at the market, looking at the map, and getting creative, and looking for things that are a win-win. That's the other side of this thing too. Is what's the win-win here? Because it doesn't happen unless everybody's aligned.
Okay. I have a whole bunch of questions around drilling. Smart. Like I think it's the whole program, quite frankly. I've got 18 questions, which I kind of got a little bit. I didn't think I was going to get into it, and I did. Maybe we do that separately, because I'm kind of keen, because we've got to talk about probability and putting yourself in a position for success and so forth. Should we do that separately? Let's do that separately.
If you like, or we can do it now. I mean, I don't know what your 18 questions are, so.
Yeah, you can bring a friend. You can phone a friend or bring a friend, and we'll go through maybe a bit more of a technical section, okay? Because I think it's kind of interesting to kind of get into the weeds a little bit. I say it's like setting yourself up for success. So I'm going to park those. Maybe we can see you. Maybe Peter. Maybe after. Let's do after Peter. Okay? Because things like this, I'm good. That we'll have you back on. We like you.
Yeah.
Okay, in which case I'm going to then sort of bounce through to kind of market conditions a little bit. Was this kind of like our weekly energy show conversations that we have? There's some of the same things in here, but let's kind of get this, because I think it's quite useful for the article write-up afterwards. Okay, so question around kind of uranium price sensitivity. In terms of, we've seen some price fluctuations, obviously, over the past 3-4 years, and the general trend is up. It's all kind of good, but in terms of your business model, how you feel that the market understands it or perceives it, how does it affect your decision making? How does it affect what you do?
Well, it affects it directly, and it certainly affects a lot of what we were doing last year. I mean, we talked about this before. Can I show you something?
Please.
My
what do you got? Some etchings.
Etchings, things.
Fantastic.
So this is the price of uranium, and this is what people are watching. And
what are we looking at there?
So the blue line is the spot price of uranium since the beginning of 2023. And certainly this is what we watch. It's what everybody watches. And as we caution people constantly is the spot price isn't necessarily the price of uranium. The red dots you're looking at there, that's the long-term price of uranium. But it's only the long-term price that we see, because 60% of the trades of uranium that go on happen off market, and we don't know what those prices are. So, we're only looking at maybe 30 to 40% of the actual market that's setting the price. But, as we look at this, we saw the beginning of 2023, things were relatively, they were marching up, and that was all good. The spot and the long term were marching up. But then near the end of 2023, and this is what everybody talks about, we saw the spot price take off. and it took off, in what appeared to be. I mean, it's quite evident that it's overheated because it got away from the long-term price like way too far. And so what happened after that was simply a correction of the spot, because the spot is very volatile. It's based on very low volumes, and it's not necessarily representative of the underlying market and what the utilities are doing. The utilities are not
just for people listening on the podcast rather than watching this or reading it. Just describe the chart that's in front of us.
So what we're looking at is the spot price of uranium through 2023 continued to rise. We saw uranium rising. We saw the long-term price rising, but near the end of 2023, the spot price took off, and it went from $50-$60 up to over $100. Meanwhile, the long-term price continued to tick along quite nicely upwards, and it went from, during the same period, from $50 up to $75. But the spot had gotten so far away from it that we saw this correction happen, and down it all came. And so through 2024, we see uranium prices, the spot price, continue to go down and down and down, even to today, to the point where it crossed the long-term price and is now below the long-term price. But if you squint and stop looking at the spot price, what you see is the long-term price taking a nice leisurely stroll upwards, and will continue to. And it's only now gotten to the point, that $80 level, where you can even consider opening up a new mine or building a new mine or that sort of thing. So, and during this time, and we've seen this with Cameco mentioned it in their call yesterday. They're not seeing serious long-term contracts starting yet. The utilities truly aren't stepped in that fashion. And I think a lot of it is all the instability that's going on the demand and supply side. They're kind of waiting for the dust to settle. They're kind of fine for this year and maybe next year. So once the utilities start contracting in earnest, I think we're only halfway through this bull market with uranium, because we've only just gotten up to the normal price, and we haven't yet been experienced the result of the price or the supply gap and drought. For the last 6 years, we've been producing less uranium than we consume, and that factor isn't built into these prices yet. So I think we're into, like I say, I think we're only halfway through this bull market. I think it's got a long way to go upwards, and that's demonstrated in the long term, not the spot. To the extent that retail investors got in when everything was hyped up on the spot market, and then got out on the other side of that, is a distraction. And so that's why the way we're approaching this market is to make sure that we've got longevity. We have to be able to operate and not get distracted by the volatility of the spot market when we see all this opportunity coming at us. So, hence our partnerships, hence our large portfolio projects that we hang on to dearly, to make sure that as the real market for uranium, the real price of uranium continues to move in that upward direction, that we're here to take advantage of that and find that uranium that the world is screaming for, and going to be screaming louder for in the year to come. But it's not going up in weeks. The spot price, the price of uranium isn't jumping up and down over the course of weeks. It's taking quarters. Here we can see it's taking a year or two, and it's going to keep going in that fashion. So our mindset has to be a little longer term than the next 2 months.
I think industry gets it, but we'll be accused of, geez, my
for
phrase
sure,
at the moment, drinking the Kool-Aid. Retail doesn't get it because there's been too many false dawns. People have made some money and they've opted out and jumped on to better things, like gold, silver.
Yeah, and that's what we're seeing. I mean, we're certainly seeing the availability of money from the funds, from the bigger shops that get it. I mean, they get it.
They get it. So when you say there's money around, it's just right now with the equities being crushed, it's really expensive money. So
it's expensive for us.
Want it?
So we got to be careful.
Want to take it?
That's right. You're not wrong.
That's the problem.
Yeah. So we look for, again, we've always been pretty careful on how we raise the money. We did a private placement in line with the IsoEnergy transaction. They, in fact, now own about 12% of Purepoint. Part of what they're doing is assembling a pretty substantial portfolio of equities across the board, ours now being one of them. And then we did that consolidation. We knew we were going to be, in weak hands for a little bit while we recovered from the consolidation. So we raised a little bit of money at the end of last year, and we'll continue to do that. And we've put ourselves in a position where we can take advantage of things like the charity flow through programs and the flow through programs that allow us to raise money at a significant premium to the market, to our market value.
But we're at that point now where we're in danger as a market, unless we get our act together, of reducing the ability to supply uranium to get enriched to, feed the existing demand of nuclear reactors, of utilities. And if that continues, utilities are going to start making different choices about where they allocate the capital. It will go into natural gas. It will mean maybe even coal stays around for a lot longer than some people think. It's going to have knock-on effects. The repercussions are big if this price stays at this point, and I'm not sure it's the suppliers who control. I thought we were moving from a sort of a buyer's market to a supplier's market, but that is not happening at the moment. There's a huge amount of resistance.
Right. But if the price of uranium goes up to $100, there's a lot more uranium available, right, than is available at $65. It's there. And, it was interesting, if you were on the call with Cameco yesterday, one of the things they mentioned is the utility that is now investing in bringing 3 Mile Island back online for Microsoft wasn't doing that on spec because they saw demand coming. They did it because Microsoft signed off on a 20-year contract for power. They had a serious contract in hand, and Cameco said, and we're operating under the same auspices, whereby we're not going to start. You're not going to see us getting real aggressive about upping production until we have serious long-term contracts in our hands, and that hasn't started yet. But it's coming, and they know it's coming. So it's there's a delay on all of this stuff, and we can talk about data centers and we can talk about all kinds of things, but it's going to work itself through the fuel cycle a little bit slower than maybe a lot of investors like to think.
I agree with you, because I think the new demand, new builds. I mean, I guess outside of China, there's always overruns. There's always delays on the money. There's delays on the build and so forth with these big projects. We're seeing it here in the UK. We're going to, apparently the UK government has said we're going to rush forward the new Hinkley C, it's not so new, Hinkley C program, and we're going to be able to get to an FID within the next 3 years. That's assuming it all goes well. It won't. We can't do projects here in the UK. We're all throughout them. And if lots of all the new projects come across those same sort of delays, which they will, then we've got a problem. The extensions seem the most likely to kind of maintain demand, not grow demand, maintain demand. So that's something. And SMRs, I think we've talked about. We did a program a few months ago talking about what that actually adds to the demand story, and it's not.
You're right about the extensions. I mean, Spain last week just announced that they were going to shut down their 7 reactors, and now they've decided that they're going to keep them going indefinitely. So and that's happening every week. So the demand will be there,
but that's standing still, right? That's standing still. I guess I'm trying. I would love to have a conversation with someone or some groups of people, or how we get access to this information. What is actually moving the price? Because it feels like retail point to spot price. Industry says it's absolutely irrelevant. Please stop looking at spot price. But that drives the sentiment, which drives the stock price down, which makes it hard for or very expensive for potential suppliers to actually move projects forward, even if they know how. So there's a lot of kind of conflicting information out there about how do we drive price, how do we actually supply into this demand, and certainly around timing. It's very confusing.
Timing's always been an issue here with this one, and access to the information, like you say. I mean, the only real usable data, I think, is the long-term price. But even it's just a piece of what we think we're looking at. The long-term forecasts and things that we're seeing 3 and 5 are up in the 80, 90 to 100 range. That's what people are projecting, and I think it's going to get there, easily going to get there. But we're only going to see it. We're only going to see it in an ancillary fashion, and that's the challenge, right? We can't. We don't get access to it.
I'd like to, I think sure. One of the guys who sort of signaled this to me back to me in 2019 was John Borshoff over at DBLA, grandfather, ex-Paladin, all that kind of good stuff. And that knows what he's talking about. He's saying, the price is not going to move quickly enough, and I'm not going to advance our project without understanding, the price is going to be sustainably at the levels that to incentivize us to move forward. And I think he's been pretty firm on that. And I think that a lot of people have been talking that game from $50 all the way up to $80 / $100. So I think the sector, because it's so small, perhaps doesn't have the oomph to compete with the utilities and kind of get them to understand this. And certainly, why would utilities want to pay more than they need to? That argument hasn't gone away, and I don't think it's been explained particularly well.
And I don't think we're going to hear it out of the utilities. You're going to, even though that's where we're supposed to be watching, you're going to hear it out of the likes of Cameco, and you're going to see what people are actually paying for it.
Yeah,
eventually they'll tell you.
Yeah. Did you, by the way, so whilst we're on TV, did you hear the kind of legal proceedings in Namibia on their project around the license?
I read about that. I haven't. I didn't hear that on the call.
Yeah. So that'll be interesting to sort of see where that gets to, because I think even in some of these countries, people say, well, you're doing you not being incentivized to move things forward means you're not moving things forward, and we need you to move things forward. We've been waiting around for a long time for this. So even the Namibian government are saying, can we please do something? Yeah,
undoubtedly, Cameco has a has the birds, the catbird seat here when it comes to seeing what's going on in the market, right? Because they're really the only game in town that, them and maybe Orano, but they're not talking. They don't have to, and they can use that information for their own, evil purposes or prosperous purposes. But it's the challenge of this industry and this market is the visibility of what's going on price-wise.
And that is why it's important to have the money to be able to go out and drill.
And that's why it's important to have the money and the time.
Full circle.
Well, it's full circle again. And I mean, and that for us over the last year or two has just become more and more and more evident. And that's why we think that, the moves we've made over the last year or two to bring strong partners in on projects that they are keenly interested in, and to still be involved in operating those projects so that we're not losing our IP, if you will. And it means that we're going to be here for a while, and we're going to be looking in earnest, and we're going to be looking at the right projects at the right time and doing the right work, and doing it without diluting the heck out of our shareholders. And I think we've got some exciting couple of years ahead of us, and we're confident and comfortable that we're going to be here to enjoy it.
Chris, good to see you. So I will hopefully bump into you in PDAC in a couple of weeks.
Yes.
Appreciate your time today. Thank you very much.
All right. Thanks a lot, Matt.